Welcome back, Metalheads. I'm Brad, your host for the No Bull Precious Metals Report. Today is Wednesday, June 23rd, 2021. And since yesterday, we can say safely that we survived Chairman Powell's visit to the Hill. The market is living to fight another day, and so let's get to it and see what's what. Surprisingly, I do have to say that this is the market dynamically is changing a bit differently than what I expected this morning. So as we get to where everything is, I'll start to point that out. But today could shape up to be a much more interesting day than I had expected. So as we look at the FinViz board, today's markets are showing some surprising positive notes. The board is mostly green, with a healthy amount of bright green. I mean, there's a lot of it. If you look into the energy sector, the metal sector has actually turned bright green since I first started preparing this. We have a bunch in the softs, we have a bunch in grains. So the commodities in the futures section is looking pretty good. Equities are just kind of riding, where they are. The Dow is riding negative 0.05% on the day. The S&P is just plus 0.02%. The NASDAQ is plus 0.13%, and the Russell is plus 0.29%. So we're not talking about big gains or losses here. We're talking about a very even keel kind of a day. And it's just, that these happen from time to time. And the equities markets are kind of responding the way they're going to, but commodities do operate differently. They represent a different sector of the entire economy and what's going on. So while it's still early, I mean, we can definitely keep on watching this and see where everything goes. But if we zoom in on where metals are right now, we can see when I first started preparing this, platinum and palladium were very bright green. They were doing great. Copper was doing great as well in recovery mode. Silver and gold were both kind of in the mucus green category, not doing too well. And silver is significantly popped already. And I'm expecting to see more of this as the day goes on. So keep watching. We're already up 1.56% over yesterday's performance. So moving on from there, let's get into the dashboard here and see where we're at. And there are a few notables that we have to do today. So I'm just going to zoom in on this so that we can get there. We have the current account deficit, which is that was a number that was reported, and it was predicted to be negative 175 or negative 205 billion. It actually turned out to be negative 196 billion. And what that represents is the total dollars that are the difference between what we're paying for imports and what we're getting on exports. So this is really kind of the financial aspect of the trade deficit. And this is one of those things that's a good news, bad news kind of a situation. We've got basically it was still bad. I mean, it's never good when this number is negative, but it wasn't as bad as it possibly could have been. So that's one of those things that look a gift horse in the mouth, and we'll see where it goes. However, as we start looking down, the market manufacturing PMI is the production managers index. And what that means is essentially it's a survey of private industry and private manufacturers that's aggregated and looked at. A number that is 50 is baseline. It means that there's been no improvement, no decline. Anything that's above 50 is improvement. Anything below 50 is not improvement, it's decline. So as we start looking at this, the previous period was 62.1. Analysts were predicting 61.5, and we actually hit 62.6 on this on the current morning's report. So that's actually pretty good. It's beat analysts' expectations, and it's still heading in a positive direction. So, so that's really where we have to look at manufacturing coming up. And again, you know that I'm a big proponent of looking at these manufacturing numbers, especially considering the role that silver takes in manufacturing. Which part of these numbers could be driving the price performance that's going on right now, is that they're not as negative as they possibly could have been. But you know, who knows? I haven't dug in at that depth yet. If we look down further, we see that the services segment of the same index is significantly weaker. It started out last period was 70.4. Analysts were expecting a 70, and we're actually a 64.8. And just because of the sector involved, I don't know it for certain. However, I would probably guess that it has something to do with the labor issues that are going on, and the difficulty in filling a lot of positions. So, who knows? I'm going to do some digging on that this afternoon probably, and see if I can at least educate myself. I would encourage everyone else to do the same. The last number that we have that was reported was the new home sales, and that's hot off the presses right before I hit record on this video. And this one is not a positive number. The previous period was 817,000. Analysts were expecting an increase to 859,000. The actual number of new home sales came in at 769,000. So that's definitely not a positive sign in the real estate sector. But you know, we'll see where that all starts to shape up, because we know that from yesterday, the actual I want to call them used homes, the existing home sales weren't as bad as what they should have been. It wasn't a horrible number at all. So we'll see where the balance kind of shapes up on this. The final thing on this is understanding that as our cavalcade of Fed presidents talking continues, today we have Boston's Fed president. The only real saving grace on this one is that his remarks are after the market close. So we'll see what comes of that, if anything. I'm not expecting much. I expect these reports to have much more significant impact overall. So moving further on, we get to our treasury rate, and we look at this quick. And yesterday we were riding about 1.5. We actually settled that down to 1.48. And then today we're riding pretty even at 1.48. So not too much of a change there, which, you know, no change in this metric is pretty good. And as long as we're under that 1.5, that's actually not a bad place to be. It's when we start digging into the 1.6, 1.7 range. That's where things get a little bit hinky. But I mean, historically, you know, that's not a bad range either. It's just that in more recent contexts, we've gotten much more used to having a lower end of the scale on that 10-year rate. So we will continue to watch that. So as we go through, let's jump into the market itself and see where things are. And you can probably already see, even from the change here on just these charts, the similarities and what's going on. I'll dig into that a little bit deeper. But as we start looking at silver, my original commentary on this, as of say 9:30 this morning, was that wow, we're still in lazy river territory, and everything's just kind of going through the motions and carrying on, and we've had an adjustment that showed up to the VWAP on that 5-day. And whereas yesterday we were actually, in the -1. Now, mind you, because these are on a daily basis, that 5-day window changes. So of course the VWAP changes and the standard deviations change. So as you can see, what was once, the -1 is now the -2. We go on upwards, and all of a sudden we're actually riding at the VWAP. So if we overlay that with the previous day, we can see kind of where everything was, and that's exactly where everything was riding, pretty much right around that VWAP. And if we look at what's happening today, we can see where that's going. Now this is a pretty good indication right here, and I'm just going to zoom in on this just for the heck of it, is that you can see that with that spike that occurred, the VWAP is actually increasing, as well as the previous day's VWAP. We haven't seen too much on the 5-day. So what that means is that volume is also starting to increase just a little bit, and we'll start to look at that once I get to the volume section. There'll be much more demonstrated there. But we can see that there is a general increase in market activity, which always tends to mean some sort of a movement. And luckily today, it seems to be a positive movement. So shifting our sights on gold, we will dig in the same way. I will zoom in on the week, and we can see pretty much a carbon copy of what I just said about silver. Things were moving. We were at the VWAP. The VWAP actually adjusted downward a bit. So what the activity was from yesterday, where it was right around the VWAP, is actually sitting right around the +1 now. And we can see that, we're also getting a spike in gold as well. So both of the main precious metals are starting to see some increases. And when we apply the previous VWAP, we're not riding too far off of where the current one is, or the 5-day rather. So when we look at the intraday, obviously the intraday is now, because of this increased activity, starting to show up a little bit higher, and it's starting to adjust there. So moving through that, we can see significant similarities between the markets of both of these metals. As we look at the performance comparison, I'll just apply both of these, and we can see that silver and gold are very similar now on the 5-day. Whereas when I first introduced this to you the other day, it wasn't. So just for kicks, we'll throw in copper, and copper is kind of a little bit different. But at the same point, when we just have silver and gold on here, whereas previously there was a pretty decent distribution between silver and gold. Gold was riding higher, silver had a lot more significant losses, blah, 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 all of that. Right now, we can see that they're actually moving a little bit closer together. Their total percentage loss isn't quite as bad as it was, and actually we're starting to venture into positive territory with this current move. So gold is actually up 0.25%, and silver is down 0.15%. So it's very possible that we'll see silver get into a net zero territory, or it's possible that we might even see it within the next day or two get into a actual positive territory again, which would be nice. With these new moves, we have the gold-silver ratio, and I'm going to zoom in on this just because I think that this shows a few things. One, we have the gold-silver ratio that's saying back here, but then we had this drop. It dropped by a few tenths of a percent, or a few tenths of an ounce rather. But we're still in the 68.32, so we're still in that 68 range, 68 to 1 on market to market. On retail, we're still in that 59. I really prefer to see that down further, but again, as long as it's below 60, that's not really that big of a deal. So it's not too bad. Getting into volume. So one of the things that I had mentioned yesterday is that I really like to see the volume a little bit higher than where it's at. And it seems as though the market gods heard my YouTube video and started to satisfy that a little bit. And that's pretty much what we're seeing, is that corresponding with some of these movements, we're seeing a much more sustained volume of what's happening and why it's starting to move the way that it is. And we're seeing silver climbing a bit. Even as we get into this more recent, we get into this. I mean, silver is uh, 18, 19,000 contracts. Previous day, we got as high as 15,000 contracts. Um, Day before that, we were at 16,000. So, I mean, early in the morning, we've got this big spike here that's pretty significant over and above previous volumes. Gold, we're currently at 37,000, and the prior period to that was 39,000 contracts. So there's a lot of active trading on gold right now, which is very nice. I mean, it's lower than normal, but it's stronger than what it was. So again, we're going to have to see where that goes and how that continues. So let's turn our attentions to retail. Retail's pretty interesting these days, and again, if you're a physical stacker, um, this is really where your attention should be, is looking at these, because I like to talk about the markets because the markets are easy to quantify, but the retail is really where the metal meets the road, and it's really where we have to focus our attentions and really watch in order to get the best deals. And we can see, as we look at at what I'm calling the key index pieces, which are the 1 ounce generics, the Austrian Philharmonics, the Canadian Maple Leaf, and the American Silver Eagle. We can see that price decrease from the previous week is still in play. However, as we start to look down a little bit further, we start seeing that this price is starting to jump a bit, with the new regime of silver moving above 26 and shifting into that 26 and a quarter range. We're seeing the retail price automatically jump on that. Shouldn't be a surprise to anyone. These are tracked pretty close, and even as we start looking at the convergence of these things, we can see that the margin is pretty much right around that $5 mark all the way through. The margin hasn't changed much. So even as the price went down, that margin still remained the same, that $5. So whether that's here to stay or not, that's a good question. But for at least the last month, it has been here. I wouldn't expect too much of a difference anytime soon. Just really don't see it in the cards. Now, this is one that I'm going to bring up, and I'm going to do a couple of different looks on this because I think that it was interesting. It was something that I noted earlier today, is that as we start looking at the relationship between the retail price and spot, we're seeing that there's some movement here, like this Philharmonic had a quick jump and then quick decline. So it was just a quick price spike that occurred somewhere along the line, and somehow, it was really just an end of day type of thing. So I don't know who was thinking what or where. I haven't dug into it at that level yet, but you see those from time to time because, of course, these are all independent retailers that I'm doing this survey from. So seeing this data comes in from a bunch of different sources. And who knows what winds up happening at any given moment, but it does get reflected on the lines. But right now, everything's moving pretty close together. There isn't a wide distribution or dispersion. Maybe two tenths of percent, somewhere in that neighborhood on the wider end. Maybe less than that. On the tighter ends of things. But as it starts going through, we can see this, and this is on the 24-hour view. Now, this is the 5-day view, and we can see where there was that tightness that existed, and then all of a sudden we got to when Powell spoke, and then everything opened up, and we can see, even on the the weekend, um, we can see as we're going into the weekend there was a price adjustment that occurred, and so Silver Eagles jumped, initially 3%. Canadian Maple Leafs jumped 2.7%. Philharmonics, 0.34%, and generics not too much, but we can see where that carried through. And on the 5-day, we can see that these are still the overall price adjustment still exists. So there is that distribution that's occurred. And when we shift back to this, that's the difference between looking at two different time periods. Is that on the 1 day, everything looks fine, but it doesn't necessarily reflect the total raw price change. And we see the same thing with gold too, and I'll probably bring that up. However, the one thing I do want to dig into quick is looking at the regressions. I don't do this too often because I think that, this can be a little bit overwhelming at times, but I think that this really exemplifies some of the price movements that have occurred recently. And again, this is the 13-week view, 14-week view, so roughly 3 months, for the individual items, and we can see kind of how things move and what the difference is between retail and spot. And the generic, we can kind of see that there was some lumpiness that occurred right here. The bigger dots are closer to current. So as time goes further in the past, the dots get smaller. Objects in the rearview mirror, and so on and so forth. So as we start looking at this, if I pull up, say, the Silver Eagle has a completely different price distribution on this. So we can see that, the $26 level, these are all within the last few days. So these were all price adjustments that occurred over here. And we're seeing that it corresponds with a much higher level of spot difference or spot variance. So this was one of the things I had observed early on in this analysis was certain items had a stratification. They had such as items down here. They had this line that occurred right over here, and then this line that occurred, which was another regime that kind of came into existence. And then there's this new regime that's formed, which is at a higher total level. So even though we're seeing, prices $25.85 for spot, the actual price of an Eagle is $41.69 for that exact same period. So we're seeing that as it kind of exists and where this stuff moves. And the Eagles have always been something that's been very in your face about this. But I started looking at a few other ones. So like the Maple Leaf, same thing. Down here we had a nice stretch of really proportionally low premium. Throughout here we had kind of this most recent banding that definitely occurred for kind of that mid-range. It was average. And then we definitely got into a higher price range. And then looking at like the Philharmonic, it's still that same stratification. You can see those lines that have formed. They're just much more compact. So there isn't quite as significant of a jump. And it's one of the things that's always led me to say, if you're stacking physical, the Philharmonics aren't a bad deal to get into, especially if you're looking for sovereign. They tend to move very similar and are priced very similar to generics on average, but they definitely have a little bit more of that sovereign panache to them. And then, of course, we look at junk silver. So junk silver has had quite the experience, and it's actually moving kind of in reverse. And we can see that these smaller dots are much higher, especially at lower price points. We can see that that this middle section kind of exists, but then we get into this lower section, and actually the prices decrease considerably. So just something to keep note of, and watch this, because this is definitely an inverse relationship to what we've seen with the pure bullion and the sovereign coins. So I have said a lot about that, but let's cap off with gold. And gold again is kind of moving the same way. Very, very similar movements. Biggest thing, we can still see this decline in the overall benchmark pricing on average compared to last week. The big one that struck me, though, that I've been kind of watching is this American Eagle, the 10th ounce, because the price is starting to creep up a bit more. And it wasn't. It was actually kind of declined and depressed over the last couple days. So this is something that definitely, this is, because it's a smaller piece than what I normally do. I mean, all of the benchmarks are either an ounce or above. So when it's normalized to an ounce, the 10th has a much wider swing, because just generally the premiums are much larger on small gold. So you can see it, it's kind of like a much coarser adjustment. You can kind of see the movements a little bit better. So definitely a different trend as we get towards, tomorrow and Friday. We'll see exactly how much of a gap we still have left on these, and see if there's anything. Average price, we can see we're getting this whole fish hook at the end. So we're starting to see with the adjustment in the gold price, this is what's happening as well. So if you didn't take your time to buy, I don't think you missed it, but you're not going to get as good of a deal as you possibly had before. Going into the gold to retail, we can see very tight banding, and then of course they open up again, and then they jump down into the tight bandings. Moving over here, this is that 5-day view, so we can see where everything opened up. It's the same period that we had on Friday. So everything opened up, and it's continued to remain open all the way through. So we're still sitting quite high. What is this? It's down here is the Canadian gold maple leaf is a net zero. So on the 5-day, that's net zero. The 1 ounce generic is 0.02%, and spot is only up 0.03% on this chart. So you can see that there are other ones that have expanded much higher, such as like the Panda, 1.72% overall. So this is just basically a demonstration of where this data comes into play, how you can start to use it, and see really where your dollars go the furthest. So with that, I believe that's going to do it for today's report. I've talked a lot on a lot of different subjects, but if you dig what I'm doing, and you find value in it, I encourage you to like, share, and subscribe. Leave me a comment. All of that interactivity and engagement goes into feeding the algorithm and spreads this reach far and wide. So tomorrow we're going to dissect whatever comes out this afternoon and see what happens, and we'll go from there. So until next time, happy stacking.